Guys, in global settings, you will have fiscal year variant, posting period variant, field status variant, and tolerance, GL users as well as for employees. Okay, and define document types, and based on this document type, we'll define number ranges. Okay, and in every step, each variant will be assigned to company code as well as tolerance and number range also. Now we'll discuss about the fiscal year variant. Okay, fiscal year variant, guys, here in the name you can see fiscal year. Fiscal year is nothing but a financial year. Fiscal year is nothing but financial year. We can call accounting period. Guys, we have in SAP we have two types of fiscal years. One is dependent and other one is independent. What the accounting period we follow, guys? April to March, and some countries will follow October to September, and some countries June to May, and some countries will follow January to December. Depends on that particular country's custom, they follow their own calendar month. So the country which follows January to December, to that particular country we call independent fiscal year variant. Okay, independent fiscal year variant. Here in SAP, for a single month we call period. In SAP, a month we call a period. Okay, here month means calendar month. A period means your accounting period. Month means a calendar month. Period means accounting period. Why we use this accounting period? To post a transaction in your ledger. Okay. To post a transaction, it might be a transactional data or it might be a master data. For every updation of data, you require a period. The reason is we has to know at the year end when we are posted. In 365 days, in a single day, you may do thousands of transactions in your company. So keeping in mind, we'll mention a period. Means a period will contain month as well as date as well as a time. Okay, in SAP it will mention your month, date as well as time when it was taken, at what time. Okay, so at the moment we can recall all those details. Okay, if you go to SE16N, transaction code SE16N, And if you mention universal journal P code AC Docker, and if you mention your company code and just click there, you will get all the data what you require. Okay, come here. In physical year variant, we have two types
Sir,
of.
can you tell that again? You go
Ma'am?
to AC16 and then what did you type, sir?
Table ACDOCA. Okay. Now, in physical year variant, we have two types of variants. One is independent fiscal year variant, other one is dependent fiscal year variant. I told you the organizations which follow the months as well as period as per the calendar, that is from January to December. Okay, to those organizations we call, okay, which follows those organizations we call dependent fiscal year variant. But as per the customs, as per their religious, as per their own method, the country which follows to the particular country fiscal year we call dependent fiscal year variant. In dependent fiscal year variant, we have one more variant, that is shortened fiscal year variant. Shortened fiscal year here, it doesn't have a complete year. Okay, to that particular year we call shortened fiscal year. If the country follow January to December, even though, okay, who has to mention, okay, in the dependent fiscal year variant only when it comes to shortened fiscal year. Okay, guys, I'll mention here independent fiscal year variant and dependent fiscal year variant. Independent fiscal year variant, one more thing we have shortened fiscal year variant. Okay. Now, actually, for a calendar, how many months will you have? 12 months. But in SAP, we'll have maximum 16 months. Okay. In SAP, we'll have 16 months. When it comes to S4HANA, first thing, okay, we'll have maximum 16 months, I told you. 12 months are used to record your normal day-to-day business transactions, and 4 months are used for audit and to correct errors and omissions, and and for all adjustments like tax and so on. Okay, we'll mention one more thing also, that is for controlling part. Okay. We'll define the controlling for controlling also. Now, maximum months, how much we can take? 16. Okay, and we are saying that in independent fiscal year variant, it will not follow calendar months. So, how the system will recognize? Guys, suppose think that in our country we are following, okay, in SAP it will take single fiscal year, but will take 2 years. as a single physical year, because some months will be in the some year, and some months will be in the another year. But in SAP, it will consider a single year. So in this case, SAP will consider fiscal year as single year. So when it comes to dependent fiscal year variant, suppose think that in we are the Indians, we follow April to March. Suppose think that 2023 to 2024, 2023 to 2024. Now 2023 will contain April to December. 2023 will contain April to December. Till December. When it comes to 2024, it will contain Jan to March. So, but in SAP, it will consider fiscal year means single year. But for us, we have 2 years. So, in order to make it a single year, we follow addition or subtraction method, that is plus or minus 1. Will not take any other digits. We'll consider only a single digit, that is plus or minus 1. In order to make 2023 as a physical year, we'll deduct 2024 to 1. And in order to make 2023 to 2024, we add plus 1. We follow addition or subtraction by using 1. Okay, in SAP, doing plus 2023-2024, we call year shift or year displacement. We are shifting 2024 to 2023 to make 2023 fiscal year, or 2024. Okay, we follow plus 1 or minus 1. The factor which we use plus 1 or minus 1, we call it as displacement factor. Okay, suppose think that we want to make 2023 to 2024. Okay, for that we use this months. Okay, April will shifting plus 1 year. It will shift it to 2024 year. Okay, until December it follows. But when it comes to January to March, we'll maintain at year shift column on 0. Okay, if you can see in the system, okay, your confusion will be cleared. Guys, is it clear or not? Anybody, any doubt regarding the fiscal year variant?
No doubt, sir.
Okay. Now, the next thing is posting period variant. Posting period variant. Okay, guys. Now, actually, you guys had chosen, suppose think that you had chosen dependent fiscal year variant. What did it contain? For calendar months, 12 months, and for special periods. Why we use these special periods? Okay, make adjustments and to do corrections and all those things. Now, you are doing very well, but our clients wants that some of the GLs should not be posted while they make the transaction. Where we can make it? We can make it through posting period variant. Otherwise, in real time, we'll open this posting period, okay, on the monthly basis, and we'll close at the end of the month for each account type. The different account types we have in posting period variant, that is A, D, K, M, S, V. A means assets, D means customers, K means vendors, M means materials, S means general ledger, and V means contracts, contract accounts receivables. Okay, so just think that you want to post a transaction for assets, but not for vendors, materials, general ledgers, and contracts. So at this moment, you will open for assets, okay, and you will not configure about this rest to post in the particular month. Suppose just you want to post for all these 6 account types. Now you just add plus, okay, there will be the option plus, means valid for all account types. Okay, you would choose this, and with the help of this plus, okay, with the help of this plus, you will open in the particular month and you will close for all the account types, not for a single account. But your client required to open for assets, customers, vendors, and for general ledger. Then at those point of time, you will choose those options only, what the client you require. Okay. And other thing is field status variant. Okay, field status variant. Guys, when you post a line item, okay, when you post a line item, what are the fields you require? Here guys, the line item is nothing but when you post a general entry. Okay. Guys, suppose think that I want to pay some amount to bank through salary. What will be the entry? Salary account debtor.
Data to bank.
To cash or bank account. Now, suppose think that this salary account is a primary account. Okay, primary cost element or secondary cost element. Now, I just want to define, okay, where am I expending? So the cost for salary account, it wants to know the cost center. Guys, I told you for internal decision making purpose, we use controlling. It means we use controlling part for your managerial team as well as for employees. Here to whom we will pay? To our employees now. So I want to know department wise cost. So in order to define the department wise cost, okay, I has to mention here my cost center. So I'll mention department one. In department one, I'm paying the salary. Means what are the fields we require? Okay, we'll define through field status variant. You can see here for salary, number of employees is a criteria. But when you purchase a good, you will mention number of quantity. Okay, and when you do allocations, you will mention machine per hour rate or foot, okay, square feet per rate. So the things which you require, okay, at which point you want to define through field status variant will define. Okay, there will be 41 field status variant field status variants predefined. Okay, here in field status variant you can see the things which you can require. You can maintain optional and mandatory. Sorry guys, require and mandatory which resemble a single meaning. Then means the require the fields which you require and you don't require and you can maintain optional. The things you will define through field status variant. The things there will be 41 field status groups. Okay, by selecting those field status group, we'll create GL accounts. General ledger account. In this general ledger account, you'll define field status groups. And these field status groups are used to transfer the data where it required. Okay, you can see here we have some different types of expenses and revenues like operating, non-operating and balance sheet items. Okay, all it will be discussed in the GL topic. Okay, in the general ledger module when we start the general ledger sub module. Okay, is it clear guys regarding field status variant? Anybody any doubt?
No, sir.
Okay guys, the next thing is tolerance. It is nothing but it is used to set limits, rules and responsibilities. Okay, you can see tolerance in the future sessions. The tolerance for finance part as well as tolerance for controlling part. And every module, even though when you do FIMM integration and FISD integration, you can see tolerance. Okay guys, now come here. Why we use tolerance means it is used to define your rules and responsibilities when you post a transaction as well as when you give the credit to your customers and when you sell a product at the moment, okay, in order to increase your business at the moment, you will give cash discounts. So here tolerance is used to put limits as well as it is used to define rules and responsibilities. And where we will what the responsibility it will put. Just think that you are the medium level employee. So you want to know how much amount per document you can put. I mean you can post. Maximum amount. Guys, here in SAP, in general, we call journal entry when we post a transaction, but in SAP, we call a document. Okay, please keep in mind this thing. Or transaction also. In general, we call journal entry. For journal entry, in general, we call transaction. But in SAP, for journal entry and transaction, we call document. And second one, amount per account open item, which is nothing but outstanding amount, guys. This is the terminology which we use in SAP. Okay, which is nothing but outstanding amount. And the third thing is cash discount. Okay. Here guys, suppose think that you are the employee. For the employee on customer approach, and he asked that he needed 50 crores outstanding, and he is asking that he will purchase 1 lakh worth of goods, and but you had only the limit amount of 1 crore. So you will approach to your higher authority. If he had, then he will make the transaction. Otherwise, he will approach it to the his higher authority, and the deal will be the closed. But you should not do it. Okay. Suppose think that he promised that he will purchase, but when you sended your product to his godown, okay, if he died, his successor may or may not pay the amount. So you may lose your job security as well as you may go behind the bars. So in order to avoid all those things, in SAP, it configured the data and you put a configuration table called tolerance. Okay, is it clear, guys? Why we use this? Is it clear all or not?
Yes.
Okay, guys. Next thing is document types. Guys, when you do a business transaction, okay, here for a posting period variant, we have different types of account types now. For general ledger, we use essay document. Okay. Guys, here for assets we use AA document, and for depreciation we use AF document. When you post a transaction through AA document, okay, and when you post a transaction through AF document, okay, here AF it is used to define our depreciation, how much we are using and how much we are keeping as a reserve to purchase a same machine or updated technology machine. What we raise the transaction, it will be deferred from depreciation to normal purchase. Suppose think that customer approach to you. Customer approach to you. Then you will raise an invoice. To raise an invoice, we call KR document. Sorry, DR document. And actually you are rising, all the things are happening very well. And when he repays at the moment, okay, we'll rise DZ document. For vendor, KR and KZ, general ledger SA, okay. This document, what here, each document will define its own business transaction. And okay, when you just imagine you purchased an asset, what the entry will be? Asset account data to bank account. Asset account data to bank account. Now you paid some expenses on assets. Then the entry will be, suppose you paid some taxes. Asset account data, taxes account data to bank account. Okay, we just imagine we are considering only assets in the AA document. The cost which are incidental up to point of installation of the particular asset will consider as asset value. Okay, just keep in mind. Now, when we make an entry, we'll merge asset account with the general ledger. Means this document type, it will use to define your business transaction with your accounting document. And in SAP, if you are done any wrong, okay, in SAP, if you are done any wrong, you can't delete it. So in order to make it correct, we use reversal. Doing for reversal, we use the transaction document type AB. And through this document type, we'll define number range. This question will be asked by your interviewer, guys. Why we use document type? It is used to distinguish your business transactions with your accounting period. And please tell that it is used to define a number range, and it is used for reversal of posting when we make a wrong entry. Okay. Okay guys, is it clear regarding up to now?